Your car is gone, wrecked, totaled. Whether it was a crash, a flood, a fire, or a tree falling on it, the insurance adjuster just used the words you never wanted to hear: total loss. Your mind is racing. You need a new car. You need a rental. You need to figure out how much the insurance company is going to pay you. And here is the part that most people learn too late. The first 24 hours after a total loss are the most critical. What you do in that window can mean the difference between getting a fair payout and getting shortchanged by thousands of dollars. Most drivers make mistakes in those first hours that cost them dearly. You do not have to be one of them. By the end of this video, you will know exactly what to do in the first 24 hours after your car is declared a total loss. I will give you a step-by-step timeline from the moment you hang up with the adjuster. You will learn the 3 documents you need to request immediately, the one number you should never agree to without checking, and the secret negotiation tactic that can add 20 to 30% to your settlement. I will also tell you what not to do, because the insurance company is hoping you will make those mistakes. This is not about being aggressive or rude. It is about being prepared. Let me save you from leaving money on the table. First, let us understand what a total loss actually means. A car is declared a total loss when the cost to repair it, plus its salvage value, is more than its actual cash value before the accident. In most states, that threshold is around 70 to 75% of the car's value. In other words, if your car is worth $10,000 and the repairs would cost $7,500, it is probably totaled. The insurance company will pay you the actual cash value of the car, not what you paid for it, not what you owe on it, but what it was worth the moment before the crash. That number is where the battle begins. Now let me walk you through the first 24 hours, hour by hour, zero. The moment the adjuster says total loss, you need to do 3 things before you even get off the phone. First, ask them to send you the total loss settlement offer in writing. Do not accept a verbal offer. You want the number on paper, along with the valuation report that explains how they arrived at that number. Second, ask for the date they calculated the value. Insurance values fluctuate. You want the value as of the date of the accident, not the date of the settlement. Third, ask about your rental car coverage. Most policies include rental reimbursement for a limited number of days after a total loss, typically 3 to 7 days after they make you an offer. Do not let the rental period expire before you have your settlement. If you need more time, ask for an extension. Top 1. Take a deep breath. Do not accept the first offer. I will say that again. Do not accept the first offer. Insurance companies are trained to start low. They know that many people are desperate, stressed, and just want the whole thing over with. That desperation is worth thousands of dollars to them. So your first response should be, "Thank you. I will review the valuation report and get back to you." That buys you time and signals that you are not going to be an easy pushover. Autre 2. Gather your documents. You will need 3 things to challenge a low offer. First, the valuation report from the insurance company. Second, a list of comparable cars currently for sale in your area, same make, model, year, trim level, and similar mileage. Third, any receipts for recent major repairs or upgrades you have made to the car in the last year. New tires, new transmission, new paint job, new engine components. These add value that the standard valuation often misses. Now here is where it gets interesting. Most insurance companies use a third-party valuation service like CCC1, Mitchell, or Audit. These services generate a report based on comparable sales in your region. But the report is only as good as the data it uses. And here is the secret that most adjusters will never tell you. The comparable cars they use are often not truly comparable. They might use cars with higher mileage, lower trim levels, or cars that were sold months ago. You have the right to ask for the list of comparable vehicles they used, and you have the right to submit your own comparables. Yanars 3-6. Start building your counteroffer. Go online to sites like AutoTrader, Cars.com, CarGurus, and even Facebook Marketplace. Search for the exact same car as yours within a 50 to 100 mile radius. Same year, same model, same trim, same options, and similar mileage. Take screenshots of at least 5 to 10 listings. Look at the asking prices, not the selling prices. But adjusters know that asking prices are higher than selling prices. So take the average asking price and subtract 10 to 15% to get a realistic market value. That is your target. Also, look for any features or options the insurance valuation missed. Did your car have a sunroof, leather seats, a premium sound system, navigation, a tow package? These add value. The valuation report should list each option. Check it against your actual car. If something is missing, point it out. Hire 6 to 12. Review your loan situation if you have one. If you owe more on your car loan than the car is worth, you have negative equity. Gap insurance, if you bought it, will cover the difference. If you do not have gap insurance, you are responsible for the remaining loan balance. That is a painful situation, but it does not affect the insurance settlement. The insurance company pays you the car's value. You still owe the bank the difference. So if you owe $15,000 and the car is worth $12,000, you owe $3,000 out of pocket. Negotiating a higher settlement can reduce or eliminate that gap. 12 to 18. Call your insurance adjuster back. Do not be aggressive or angry. Be polite, professional, and prepared. Say this: thank you for the valuation report. I have reviewed it and I have some concerns. The comparable vehicles you used are not truly comparable. For example, your report used a car with 80,000 miles, but mine had 60,000 miles. That difference is worth about $500 according to industry guides. I have attached 5 local comparables that support a value of X dollars. Also, your report missed my new tires and my upgraded sound system. I have receipts. I believe a fair settlement is X dollars. Then give them a number that is 10 to 15% higher than your actual target. This gives you room to negotiate down. Halex 18 to 24. Be prepared for their response. They may come back with a slightly higher offer. They may stick to their original number. They may ask for more documentation. If they stick to their original number, ask to speak with a supervisor. Supervisors have more authority to approve higher settlements. If that still does not work, remind them of your state's insurance laws. In most states, you have the right to invoke the appraisal clause. That means you hire your own independent appraiser, the insurance company hires theirs, and a neutral umpire decides the value. This costs money, usually a few $100s, but it can add thousands to your settlement. Most insurance companies will increase their offer before they let it go to appraisal, because appraisal costs them time and money too. Let me give you a real-world example. A driver in Georgia named David had a 2018 Honda Accord totaled. The insurance company offered him $12,000. He asked for the valuation report. He noticed that they used comparables with higher mileage and missing the sunroof his car had. He found 5 local listings for similar Accords priced between $14,000 and $15,000. He also had receipts for new tires and brakes from 3 months ago. He sent all of this to the adjuster. The adjuster came back with $13,500. David asked for a supervisor. The supervisor approved $14,000. David accepted. He got $2,000 more than the initial offer just by spending a few hours on research. That is $400 per hour for his time. Not bad. Now let me talk about the things you should never do in the first 24 hours. Do not sign any release of liability form until you agree on a settlement amount. Once you sign, you cannot go back. Do not accept a check without reading the fine print. Some checks say final settlement on them. If you cash it, you have agreed to the amount. Do not let them rush you into a decision. You have time. The insurance company will try to pressure you because they know you need a car. That is their leverage. Do not give in. Do not forget about sales tax, registration fees, and title transfer costs. In most states, the insurance company is required to pay you the sales tax on the value of the totaled car because you will have to pay tax on your replacement car. Ask your adjuster if sales tax is included in the offer. If not, ask for it. Do not forget about your deductible. If you were not at fault for the accident, your insurance company will try to recover your deductible from the at-fault driver's insurance. But that can take months. Ask your adjuster if they can waive your deductible up front if you are not at fault. Some will. Now let me address the salvage retention option. You have the right to keep your totaled car and take a reduced settlement. This is called retaining salvage. If you keep the car, the insurance company subtracts the salvage value from your settlement. You then own the car with a salvage title. You can repair it and have it inspected to get a rebuilt title. This is only worth it if you are mechanically inclined or know a good body shop. For most people, selling the car to the insurance company is the better choice. Also, consider your rental car timeline. Most policies cover a rental for a limited number of days after the total loss settlement is offered, often 3 to 7 days. If you are still negotiating, ask for an extension. Tell them you are working on the valuation and need more time. Many adjusters will grant a few extra days. If they refuse, you may have to pay for the rental out of pocket. But you can add that cost to your settlement negotiation. Say, I have incurred additional rental expenses because your initial offer was low. I am adding $300 to my counteroffer to cover those costs. Let me give you a quick checklist for the first 24 hours. 1. Get the settlement offer and valuation report in writing. 2. Do not accept the first offer. 3. Gather receipts for recent repairs and upgrades. 4. Find comparable cars in your area. 5. Review the valuation for missing options or incorrect mileage. 6. Submit a counteroffer with documentation. 7. Escalate to a supervisor if needed. 8. Do not sign anything until you agree. 9. Ask about sales tax and deductible.